So if I told you I could show you exactly how to stash away $1 million tax-free, would you be interested in finding out how to do that? If the answer to that is yes, you're gonna wanna stick around for the entire video today. So what I'm going to be doing here is I'm going to be showing you guys step by step exactly how to build a $1 million Roth IRA retirement account, which is essentially a type of retirement account that allows you to stash away your money and allow it to grow completely tax-free. And not only that, guys, I'm gonna be showing you exactly how much money you need to invest, and we're gonna be going over the major age groups ranging from 20 to age 50 to show you guys step by step exactly how you too can do this as well. But before that, it is important to mention, guys, this is for entertainment purposes only, and I am not a financial advisor, and you should always do your own due diligence before you begin investing in anything out there. All right, so now let's go ahead and answer the question here of what actually is a Roth IRA. Most people out there have heard of the 401k, and I often get people asking me, is it the same thing? Are you allowed to have both? So let's clear some of those things up now. The 401k is a retirement plan that is set up by your employer, and it allows you to contribute pre-tax income. So you're able to lower your taxable income each year by contributing to the 401k, and the contribution limits are significantly higher. So with the 401k, you end up paying the tax bill at the very end after your money has grown for many years or many decades. Now the Roth IRA, on the other hand, is something you set up on your own. Your employer doesn't set up the Roth IRA for you, and you are able to have both a 401k and a Roth IRA. With the Roth IRA, however, you're not contributing pre-tax money, you're contributing money that you've already paid taxes on. And there's a huge advantage to this because after your money has grown for many years or many decades, well, you don't have to pay taxes on it because you paid taxes on the way in. So my favorite analogy here for the Roth IRA versus the 401k is that the 401k gives you the instant gratification of having a lower taxable income. However, with the Roth IRA, it is more of a delayed gratification of you pay the price now of contributing post-tax income, but then years later, you can take that money out tax-free. So that is exactly why the Roth IRA is this powerful tool that can literally make you a tax-free millionaire. And I'm gonna show you guys exactly how to do that in a little bit. So just how much money can you contribute to a Roth IRA retirement account? Well, the IRS sets limitations on this, and every couple of years, they will raise the amount of money that you are allowed to contribute to your Roth IRA every single tax year. So for 2019 and 2020, that limit is $6,000 per year or $7,000 per year if you are 50 or above. And the only stipulation other than that is that this has to be earned income from a job or something like that. Now there's also income limitations where if you're making above a certain amount of money, you are not allowed to directly contribute to a Roth IRA. However, there's a very simple workaround called the backdoor Roth IRA. And I'll go ahead and put those income limits up on the screen right now. It's significantly higher than what most people are earning, but if you are somebody who makes above that dollar amount, all you have to do is look up the backdoor Roth IRA strategy. And this is not some kind of illegal trick. It's a 100% legal strategy that allows you to contribute to a Roth IRA even if you make above the income limitations. All right, so now let's answer the next question you probably have here, which is when can you actually touch the money and start withdrawing money from the Roth IRA? Well, the good thing is you're able to withdraw your contributions at any point in time. And that is simply the money that you use to fund your Roth IRA. So let's say, for example, you put $5,000 into a Roth IRA every single year for 10 years. That means you have contributed $50,000. Well, you are allowed to withdraw $50,000 at any point in time from the Roth IRA, tax-free and penalty-free. You just cannot touch the earnings because if you do, that is when you will pay taxes and penalties. Now, as far as withdrawing the earnings from the Roth IRA, You can begin doing that tax-free and penalty-free as long as you are age 59 and a half or older and you have had that Roth IRA retirement account for 5 years or more. So what should you invest your Roth IRA in? Well, what most people are going to follow is a strategy of investing in something called an index fund, which allows you to have diversified exposure to the entire stock market as well as the entire bond market. And so most people who follow this passive investing strategy are investing in both bond ETFs as well as stock ETFs, because the stocks are going to be higher risk, higher potential return, while the bonds are going to be lower risk, lower potential return. And obviously, as you get closer to retirement age, you don't want as much risk in your portfolio. So since a Roth IRA is a retirement investment, it's a very long-term investment. And that is why most people will just put their money in low-fee ETFs, but you can put your money in whatever you want to. Later on in this video, I'm going to show you guys an option for a completely fee-free Roth IRA retirement account that lets you invest in whatever you want to. So if you want to invest in ETFs, you can do that on this platform. Or if you want to invest that money in individual stocks, you can do that with the Roth IRA as well. Now, for the examples we're going to be going over in this video, we're going to be looking at two ETFs offered by Vanguard. One is going to be a bond ETF, and the other is going to be a stock ETF, giving you diversified exposure to the stock market and to the bond market. And the whole idea behind these ETFs is that you're paying as little in fees as possible, and rather than trying to beat the market, you just own the entire market, and you do well when the market does well as a whole. And most people are more successful following this strategy than investing in mutual funds or actively picking stocks. So the stock ETF we're going to be using is called VT, and it is offered by Vanguard, and this is the Total World Stock ETF, which is going to give you a small piece of ownership of all of the publicly traded companies in the world. Now for the bond ETF, it's going to be BND, offered by Vanguard as well, which is the Total Bond Market ETF, which is going to give you a piece of all of the US investment grade bonds. And investment grade simply means that credit rating agencies have deemed these bonds investment worthy, so it doesn't hold any junk bonds. All right, so now let's answer the question of where do you actually open up a Roth IRA? And to be honest with you guys, I know it may sound like a complicated subject, but it is extremely simple. And I'm going to give you guys my favorite option right now, which is M1 Finance. Now, for full transparency here, guys, I am affiliated with M1 Finance, so I do earn a commission if you decide to sign up under my link, which I do certainly appreciate as it allows me to make more videos like this, and it just helps support my channel. Now, the main reason why I like M1 Finance is because they are commission-free and fee-free, which means you do not pay any commissions for trading stocks or ETFs on the platform, and you pay $0, nothing in fees to M1 Finance for setting up and hosting your Roth IRA. Not only that, the minimum to get started is extremely low, which is just $500. Now, beyond that, the other reason why I like M1 Finance is because they have pre-built portfolios that you can invest in. So with M1 Finance, you're not stuck choosing your investments and building a portfolio from scratch. You can simply invest in some of these pre-built portfolios. And what I'm going to use later on for these examples is basic stock and bond portfolios, and these are coming right from the M1 Finance app, and they're completely free to invest in. And I know the whole process of opening up a brokerage account can be a little bit intimidating at first, and that is why I put together a completely free 30-minute video training showing you guys step by step how to get started and open up an account with M1 Finance. So if you're ready to get started, guys, the link is down in the description below, or if you're looking for a little bit of hand-holding, that free training link is in the description below as well. All right, so now we're going to run through the numbers, and I'm going to show you guys exactly how you can build a $1 million Roth IRA by the age of 60. And as I'm sure you guys could guess, if you know anything about investing, the sooner you start investing and contributing to this Roth IRA, the better, because that is how compound interest works at the end of the day. The longer you allow your money to grow, the more growth you see with that money. And with the growth of your money from investing, it's going to be exponential growth, not linear growth. So if you're a young person watching this video, you're gonna wanna pay attention because this can literally turn you into a tax-free millionaire. And the other thing I want to mention here, guys, is that you have to remember that returns are never guaranteed with the stock market. We're going to be looking at 10 years of historical data when we're doing our estimated annualized returns here. But do keep in mind, you're not going to see that return every single year because the stock market has times where it's going up and other times where it's going down, called bull markets and bear markets. But if you're a long-term investor, historically speaking, these returns are what you may expect. When you get closer to retirement, you want to invest more of your money in bonds and less in stocks in order to have less risk in your portfolio, and this is something called your portfolio allocation. Now, as far as what percentage of your money goes in stocks and bonds, we're going to be using a helpful table I found on Financial Samurai, and I will go ahead and link up to that down in the description below. It'll tell you more about these allocations and why these percentages are the way that they are. Typically, every 5 years, you're going to want to adjust these allocations because what a 20-year-old invests in is going to be a lot different than what a 45-year-old invests in. But that is where something called a TDF, or target date fund, comes in handy. And I'm going to show you guys exactly how you can invest in this TDF completely free through a brokerage called M1 Finance. But a target date retirement fund is going to automatically adjust your allocations as you get closer to retirement. So all you have to do is put in the year that you're looking to retire, and they are going to automatically adjust your allocations as you get closer to that retirement date. All right, guys, so if you started following this strategy at age 20, according to that chart, you would have 100% of your money invested in stocks and 0% in bonds because you have so much time to allow your money to grow, you can take on more risk. So we're going to assume you have 100% of your money invested in stocks in that Vanguard Total Stock Market ETF. And over the last 10 years, the annualized return from that has been 8.81%. So if you simply invested $260 per month or $3,120 per year from age 20 to age 60, at that return, you would have a portfolio worth $1,001,949.52. So you don't even need to max out your Roth IRA at this 8.81% return in order to build up a $1 million portfolio. And obviously, guys, if you did max out that contribution, this would be a multi-million-dollar Roth IRA, not just a $1 million Roth IRA. Next up, let's assume you started at age 30. Well, according to that table from Financial Samurai, you would have 70% of your money in stocks and 30% in bonds. And if you had that 70-30 split of these two Vanguard ETFs, over the last 10 years, the annualized return has been 7.23%. So let's assume you maxed out your Roth IRA contribution from age 30 to age 50 at $6,000 per year. Then from age 50 to 60, you invested that full $7,000 per year. Well, based on that 7.23% return, your IRA would be worth $623,578.89. So obviously, guys, based on the current contribution levels, it's not really possible to build a $1 million Roth IRA investing passively, above the age 30. But still, to have over $500,000 is nothing to shake a stick at. Now let's assume you start at age 40, and based on that table, you would want to have 60% of your money in stocks and 40% in bonds. Well, over the last 10 years, based on those two ETFs, that has been an annualized return of 6.69%. So again, we're going to assume you max out your Roth IRA contributions, including the additional $1,000 per year from age 50 to 60. So if you went ahead and did that, your portfolio based on that 6.69% return would be worth $257,618.86, so just over $250,000. And then finally, let's assume you started this at age 50. Based on that table, you would want to have half of your money in stocks and half of your money in bonds. And over the last 10 years, based on those two funds, that has had an annualized return of 6.16% per year. So let's assume for those 10 years, you contributed the maximum that you could, which is $7,000 per year. That means after those 10 years, by age 60, you would have a Roth IRA value of $92,961.25. Now, obviously, guys, there are a few things we are not factoring into these calculations. Number one, we haven't factored in inflation here. And then number two, obviously, as you get older, these allocations are going to change. But this just gives you a general idea of how much money you need to invest in your 20s in order to build $1 million Roth IRA. Or it shows you by age 30, 40, and 50 how much you can have by maxing out your Roth IRA contributions. And the other thing that we haven't factored in here that's impossible for us to tell is whether or not the IRS will raise these contribution limits as time goes forward. And as they raise those contribution limits, this allows you to funnel more money into your Roth IRA. So anyways, guys, at the end of the day here, the truth is if you're looking to build up a $1 million Roth IRA, because of the contribution limits, you really have no choice but to start as a young person. So if you're somebody who's in their 20s watching this video, time is on your side, and it's entirely possible to build a $1 million Roth IRA for yourself. But even if you're an older person, don't get discouraged because you still have the ability here to set aside some money for yourself and allow it to grow completely tax-free. So if you guys want to go ahead and get started with a completely fee-free Roth IRA, the link is down in the description below to get started with M1 Finance, as well as the link for that 30-minute video training, which will show you guys step-by-step how to get started. But thank you guys so much for watching this video. I hope you enjoyed it. If you're interested in seeing more videos just like this, make sure you subscribe and hit that bell for notifications. And I hope to see you guys in the next video.